Yo, can you guys see me? Let me get a little 777 in the old chat. Oh, I had to put my water. There it is. Can you guys hear me? Can you see me? What's good, Flores? What's good, Mick? What's good, Jay? What is good, Brad? What's good, Kashul? Ibs? What's good? What's good? Christoph, Tony? What's good? What's good? What is good? What's good, Kevin? What's good, everyone? So let me kind of get straight into this then. So, oops, just spilled some water. Let's pretend it didn't happen. Let's start recording. So, obviously, we have a lot to talk about today. There's a lot of shit that has obviously been going down recently. So I do want to kind of keep you guys all up to date with everything. So obviously no one's on the wrong side of the markets because one thing that has just happened. So I'm just trying to. Yeah. All right. One thing that's obviously just happened is we've just had a fucking US government shut down. The government in America has shut down. Do I still have music coming out? I do. Let me stop that. My fault. All right. The US government in the US has now shut down. All right. Now, what's actually going on? So obviously you got your two different political parties, right? Now, quick side note, today's agenda. I'm going to go through the economics, talking about the whole government shutdown stuff. We're going to do some trade recaps, and then we're going to obviously get into the market outlook. There was a couple of things in the chat. Some of you guys were asking me earlier, so obviously we're going to address them as well. So yeah, first things first, the whole government shutdown, man. So the government has now been shut. This is the second shutdown. So why is this happening? What's going on? So obviously in the US government, you've got two main political parties. You've got your Democrats and you've got your Republicans. So, and basically right now they had to put a bill to get more money, basically. And the one of the political parties, they're basically trying to hold the others hostage by shutting the government down because they don't like Trump's stuff, what he's doing. So their opposition have now shut the government down in retaliation to what they're doing, which is obviously the budget cuts, and they're obviously not trying to waste loads of fucking money. You know, Trump's a businessman, he knows what he's doing, he knows how to run multi-billion dollar and trillion dollar corporations, and the country is the same sort of thing. So they shut the government down. Now, that doesn't mean the world's going into anarchy. Obviously, all normal services like healthcare and policing and all that still running, but these lot won't be getting paid. No one's getting paid. So, and a lot of people, like in some of the other places, like some of these departments, they have no job. They're not going to work, so they're not getting any money. So, what do you think is happening to the labor market right now? It's cracking. It's weakening. We've been speaking about the cracking and the weakening of the labor market for months. And what obviously now let's build this in context. Why is this now important for us as traders? And obviously, how is this going to influence our narrative? So obviously, we as traders, and primarily we're looking at US markets, we're looking at what the central bank and the Fed are going to do, right? Because once you know what the central bank's going to do, the people who control the money, you know what the currency in the market is actually going to do for trading. So the Fed, obviously, we know they look at their inflation and we know they look at their labor market. Kaiser, what are you doing, bro? One sec, he wants his toy. Give me a sec. Right, you go over there and stop disturbing me. Thank you very much. So they look at obviously labor and they look at inflation, right? Two things, that's it. And we know that inflation isn't a problem. You know, anyone tries to tell you right now inflation's a problem, block them. They don't know what it's talking about. Inflation has not been a problem for the last year and a half. Why? Because they've been cutting rates, right? Oh my God, Powell just cut rates. No, he didn't. He's been cutting rates, bro. Right? We've been in quantitative easing for for almost 2 years now, right? So rates are coming down. We know that. It's just now with this government shutdown, what is the speed at which these rates will fall? You look at bond yields across the markets, right? Bond yields, we look at our yields, and this we know we look at yields, that's what drives the dollar, right? Short-term yields have been selling off like absolutely crazy, all right, the last few years. So why is this government shutdown important for us trading today? Because the labor market is weakening even more. And if we go back to the rates, right, what caused the rates to be paused from December 18th up until last month? or September 17th. What caused that long pause was that the labor market was supposedly strong and inflation was obviously cool. So they wasn't worried about, do we need to do we want to cut rates too quickly because obviously the fears that inflation spikes going to occur. And labor was supposedly really strong. But obviously the last few months, obviously if you've been following our streams, obviously go watch the recordings in the chat every Tuesday and Thursday. We've been speaking about the same thing for the last almost 3 years now, right? That now the data has been revised, so the labor market is a lot weaker than what it once was. So now Powell saw that, cut rates last month, and now guess what? He's playing catch up. He's trying to stop the recession. He's trying to stop a global shutdown, well, a US shutdown. Now, is he going to stop it? I don't think so. I think next year we're still going for the world's biggest crash, and I will speak about why again in a moment. But now, for these last few months, these rate cuts and the last few, well, last about 2, 3 years, this quantitative easing cycle we've been in has been causing our risk assets to spike, right? So we look at, we'll start off with the dollar, right? Obviously, dollar has been selling off. We've been extremely bearish since we came into our massive weekly and monthly zone of supply. Oh my God, Kieran, dollars in demand, you fucking retard. Bruv, are you smoking crack? Look, we have a distribution, we come into supply, and we're now going to create new lows, '09 lows, right? The dollar only loses value over time, right? The US is in debt $36 trillion. There is no fucking reason for this thing over decades to continue higher. I think of course, unless our supply over here breaks and economics change, we will eventually hit, '07 levels on the dollar. But especially as we see the world slowly moving away from the dollar as well. But the point is now, and this is for the more short term, continuing this intra week cycle, right? Obviously, we know we got supply up here, and we know we got supply here. So I'm going to keep trying to short it because this weakening of the labor market is going to force the Fed to cut rates even more. Key word. If they're going to cut rates even more, what do you think is going to happen to the economy? If they're cutting rates even more, they're trying to stimulate the economy more. That's going to devalue the dollar more. That's going to cause your cryptos, your stocks, your metals to continue rallying. Until, yes, like you said, Ibs, until inflation starts to spike. Once we start seeing inflation start to spike, right, which will probably start happening around January, that's when the tide will potentially start to switch. But for now, right, short term, next few weeks, next few months, the government shutdown is weakening the labor market more. The longer they shut it down for, the more it's going to weaken the labor market. The quicker the Fed's going to cut rates because they don't want a recession. The quicker the Fed cuts rates, the more aggressive the dollar will short off. Why? Because bond yields fall out the skies, and they've been falling out the skies. I mean, 2 years at 3.5%, right? So rates are going to come a lot fucking lower. Um, and of course, risk assets are going to continue rallying. So for now, this government shutdown, oh my God, government shutdown, markets are going to crash. Retard, right? When others are fearful, you want to be greedy. When others are greedy, you want to be fearful, right? Now, does this mean, right, from a technical standpoint, does this mean the markets must, with 100% certainty, sell off today? No, because this is where you now have to combine that direction with your Wyckoff. Because of course, yeah, cool, we know economics is bearish on the dollar, bullish on risk assets, but this is where now we have to define, for example, our market structure. And no, this isn't market structure, lower lows. This is not a breaker structure to the upside, right? What we look at is our schematics. And we are currently in this redistribution of price, right? All the way down to this low. We've come back up, we've mitigated the 50%, and we are starting to react off this. So if I can keep seeing, right, a lower time frame bearish market cycle where price starts manipulating highs and breaking to the downside, I'll keep looking to short the dollar back down to at least the 96, 200 region. Now, if we see some spikes and they want to come up higher, why would they do that if we're in why would they want to come up higher if we're in a bearish economic environment? Because why would you want to sell something at $10 if you can sell it at 20, right? You always want to sell at a premium. So what they can do is manipulate price higher to the 80% around the 100 level, 99.5. and they can actually distribute it from here, shake out all this liquidity, and bring price lower. Now, of course, can this zone fail? Sure. Can we get another redistribution like that? Of course. But then how do we avoid the loss in here? Well, you don't wait, you wait for the micro. Because if you just blindly enter on that, of course you're going to lose. But if you wait for that lower time frame distribution in here, all right, then you've got proof of supply, then you can roll it over. Or of course, we can come all the way up to these 105 regions on the dollar. Based on these rate cuts, I don't really think we're going to see that. I mean, the next sort of news that's going to be sort of impactful for the markets and direction is going to be the labor data tomorrow. Yesterday, we obviously had ADP non-farm employment change, and we're seeing a further weakening in the labor market, minus 32,000. So this can be the precursor to what we're seeing tomorrow. And obviously, tomorrow, if we start seeing this labor market weaken, earnings are going down, unemployment's increasing, right? The labor's weakening. This is all going to just keep adding to this narrative of risk on and continuing to buy risk assets and sell the dollar. And obviously, that will then bring us on to next week, which we'll speak about that when we get there. So for now, keep an eye on labor tomorrow. If the labor market comes out stronger, I mean, again, it can take a while for this because remember the data lags. So like this data we're going to get is going to be from last month. So if this comes out positive tomorrow, I'm not too worried because we've got this government shutdown, which is going to probably fuck up the labor market for the next data we get. And obviously, the more the labor market weakens, the faster they're going to cut rates, the better that is for us to for our risk assets, of course. So now, if we kind of dive into the technicals on this is really what I'm looking at on the dollar today. Ideally, what I really want to see is pricing and accumulation right now because there is a little bit of demand over here. So what I do want to see is I do want to see price create a redistro, and I want to see it because we're in a cum now. So I want to see those buyers come in. I want to see the fake out and then the break of our demand, and I'm going to be looking to walk this thing down. Is a chance that we could just be chopping around because it is pre-NFP, and tomorrow could be that catalyst to do that. Now, of course, if we don't see that on the dollar, there's not really much else I want to do with it. This is pretty much what I'm kind of waiting for at this point. Am I going to buy the dollar up? No way. There's no economic reason for long-term buyers to step in on this, so I don't want to be against the economics. Does that make sense on the dollar? Does anyone have any questions on that in regards to the economics or no? Feel good? No worries, bro. I got you, man. Silly pal, yeah. He's very fucking silly. I think he was on such. I think he's been on the ego trip, bro. Because obviously Trump's been pressuring him to cut rates, and he's like a kid, like, no, I'm not gonna cut rates. No, I'm not cutting the rates. And obviously he's been forced to cut rates because Labour's weakening, and it looks like it's going to keep weakening. My forecast now going into next year is we're going to see inflation start to spike with obviously all the Christmas demand because inflation normally spikes when the economy heats up. So they're going to overstimulate the economy too early by the rate cuts. Everyone's going to be buying shit for Christmas. That's going to cause, next year, January, February, March, inflation to start rallying. Everyone's going to be making loads of money from crypto in the next few months. Everyone's going to be spending it. Prices are going to rise. So what's going to happen? Inflation is going to rise. And then as the tide is not going to turn, when everyone's finally winning and bullish, what's the one thing true against all markets is that everyone loses. So like in terms of like an emotional market sentiment where we are now for macro cryptos, macro stocks and stuff, right? We are basically in I appreciate you, bro. We are here, right? We are in belief and we are going to thrill. Just think about it right now. When Powell cut rates last month, for the last 3 years on social media, I didn't see one person, apart from my friends, obviously, and you guys, right, talk about economics or Powell once or rate cuts. The motherfucker talks about rate cuts one time. Everyone's an economic analyst because everyone's now in belief. Everyone who saw the crypto markets and the stock markets rally is now buying it because it's fucking pumping. Of course, everyone's going to believe in Bitcoin because over 100K. But where was everyone when we crashed down to 15K? When the Silicon Valley banks were collapsing, when FTX was collapsing? Where was everyone back then? Everyone was scared. No one was willing to buy crypto. No one was talking about it. Everyone was fearful. Where was we in the cycle? We was down here, depression, because everyone who bought in November at 69K. It's quite ironic. The high was 69K. Was it 60? Imagine if it was 69,420. But anyway, right? The high at 69K, everyone was everyone was greedy. They lost. And now where are we now? We're not in thrill and euphoria yet. Not quite. We're in belief because that rate cut made everyone believe in the markets now. Before it was like hope and optimism. And soon you're going to see insane rallies. You're going to see, bro, I'm literally, mark my words, right? You're going to see, and this isn't just me trying to throw shit out of thin air. I'm talking about statistics, facts, and data and experience from all the other cycles. It's the same thing. The thing repeats. It's a cycle. It's cyclical. History repeats itself. You're going to see everyone start talking about crypto soon. Oh, they are already, but more people. Your nan's going to start talking about it. Your taxi driver's going to start talking about it. All right. Your barber's going to start chatting about it. And if they know you're trading, they're going to start asking you what coins to buy. This is when you've got to start thinking about selling. Now, we've got time. We've got 2 more months now, actually. All right. We've got 2 more months. And these last 2 months are the most bullish of it all. So the point is, we are here, entering here and here. So get ready for the gains. Get ready for insanity and get ready to short. All signs are promoting a pump. I mean, look. I mean, economics. We just spoke about it, and look what the charts are doing. You know, if you was on the call on Tuesday, and obviously in last week's call, we spoke about these zones. We spoke about this being an accumulation. We end up getting our terminal shakeout, and now we've been expanding. This is going to be this most likely is going to be the rally that's going to send us to all-time highs again. Um, could it give a retracement? And this is now what I would want to see to take a trade. Could this now, come back and give me a pullback down here? Sure. All right. If I do get a micro in here, right, will I be looking to buy? Definitely. Or if it obviously reaccumes again, I will buy the reaccume. So I'm definitely looking for more longs on crypto. Um, 1 hour? What do you mean, bro? Why do you think the DXY will go back to the 50? Meanwhile, why do you think the DXY will go back to the 50% level? Meanwhile, the dollar, the same thing, bro. DXY and dollar are literally the same thing. And I never said the market will do anything. I don't predict. I don't predict anything here. I don't predict. I just react. I look at data and I create if-then scenarios. And if my scenarios line up, I only have one conclusion. So I don't, bro, like for me to take a trade, I don't know if price is going to come up to, for example, let's say here, I don't know if it's going to come to the 50. No one does. But what I do know is that when I take trades off the 50% with micros and wait for schematics that meet my plan, I win trades. Does that make sense? So don't try and predict, bro. I don't, what I mean, I don't think anything. I only create if-then scenarios. If price does this, then I'll do that. And what does it need to do? Form a schematic. What do I need to see? Oh, you like the hat? Come on, my G. All right, this is that 7-Eleven, or not even 7-Eleven Single. It's like fucking £3. Very nice. Um, but what was I going to say? Just if then scenarios. If a schematic is going to mitigate or we're going to manipulate, and I trade mitigation. So if price needs to break demand, mitigate supply and distribute, I'll trade it. If price creates my redistro and it gives me cause and effect, I'll trade it. And if none of that happens, I've got nothing else to do. So could it just absolutely sell off now? It could, you know. But obviously for me to short, I want to sell at premium. I don't want to sell at a discount. I don't sell like you got to observe the masses and do the opposite. Like the whole point of showing you this chart here is because when the market's selling off, people sell, and when the market's going up, people buy, which is wrong. You got to buy when the market's going down. So you got to buy when the market's going down and sell when the market's going up. if that makes sense. All right. So yeah, that's kind of my thesis for dollar and crypto. Now, there is something else I'm looking at. Where is my phone? Okay, I'll put it up in a minute. So let's look at euro and pound. So euro is going to be pretty much the inverse of what the DXY does. So I'm still pretty much waiting for, I mean, higher time frame, extremely bullish. We came into the rate cut decision candle, mitigated out of it. We're starting to break lower time frame order flow. We're in an active distribution now. So what I need to do, right, is wait for my spring and then my reaccumulation confirmation. And that is how I will be trading the euro. So, I mean, am I going to short it today? Fuck no, bro. Like, I mean, and this is where now you got to know about probability versus possibility because is there a possibility now that price can distribute from here? It's distributing. Can it, can this create a manip and then distribute and come down? It can. It really can. But now, what's the probability of that happening? Over 1,000 trades is extremely low. And this is why a lot of you lose because you'll take a trade like this short now and win one off you one time. And then in your head, you've reinforced that you're a profitable trader and you've won this trade and you're going to do it again. But let's think about this. Economics bullish. We've came into demand. Now seeking and destroying new highs, invalidated supply. How many times are you gonna win buying a reaccumulation in the bullish market when there's zero economic reason for sellers? How many times will you win that trade? Not a lot. So for me, that's always what I'm thinking about. What is the highest probable situation here? Right? And that's obviously when the market's in alignment. So here, what do I need to see for the market to be in alignment? I need to see this reaccum confirm itself, perhaps create this manipulation. And then, I mean, if it does give a micro in here, I would actually give it a go. I would try and buy it. But I think I'd rather see the big reaccum confirm itself at this point. And then looking at pound's going to be the same thing. Pound ended up reacting off one of these little levels, but there's nothing I'm doing with it until the dollar clears up. So if we kind of zoom out on this higher time frame, still in demand. All right. Oh my God, Kieran, they had to break a structure. No, it didn't. All right. Where's your legs? This is our leg. We've now come back to demand, and we're now potentially reacting out of it. So for me, all right, what I need to see on the pound is pretty much the same thing. So I want to see price manipulate to lows, break to the upside, and then play the reaccum. And I think NFP is going to be that excuse for manipulation. And again, if NFP shows weakening in the labor market, initial fear, make everyone scared, and then continue with the overall narrative. So now if we open up, everyone good with pound, euro, and dollar? Any questions on that? On Bitcoin? So if we look at Goldilocks, obviously we know we're still bullish on this. We look at silver, we know, I mean, we've been bullish on silver for a minute now. I mean, we're still looking at silver to hit $50, even to crack towards like my main target on dollar on silver is like 60, 61. I mean, we just, zoom out. We came into a massive level of demand. We had a multi-year accumulation. That virus that didn't exist was the spring, and then price obviously gave the sign of strength, built a reaccumulation. All right, and now we're just in like now. Obviously, I would love to buy from here, but of course, for that to happen, the lower time frame needs to break structure first. So I can basically just follow the market cycle until it says no. So kind of coming into more of like an intraday time frame. This is the last schematic that maintains structure here. But of course, like this was formed in July, August. So do I really want to wait months to take a trade? No. So I just apply the same logic. Keep following the market cycle until it says no, because I've got economic reason for price to come higher. And if you look at kind of where we are on silver now, we've got a nice reaccum. And what I would like to basically see now is that take out, sweep both of those Asia lows. That'll be nice on silver. I mean, obviously, there's a small chance it can accumulate out of here, but yeah, I mean, you can't see a manipulation. You're going to be the manipulation. So yeah, that's what I'm waiting for on silver. Now we have to check gold because it's a correlating asset. Goldilocks, what are you doing? Okay, so gold actually gave that little sweep in here, but it was during a year. So I'd rather, because we got the New York Open in about an hour, the stock exchange. So I want the Open to give me a manip, and we know the Open can tend to give manips. So we can see something like that. I think that'd be pretty juicy on Goldilocks. Now, if you want to be super aggressive because it's a Thursday, I mean, this isn't a cum. I don't like that the Asia's not been swept, but if it does give a micro in here, and obviously silver's showing some strength as well, and we're seeing our relative strength, we can go ahead and look in. This is an aggressive zone in here. I'm not going to put a lot of weight on this and really hold my breath here. I'd rather wait for price to come down here on gold. And then obviously back to silver. I mean, yeah, silver could give like something like that. Again, I'd rather silver give a bigger shakeout, and I'd rather try and trade silver because it looks like gold's leading on the higher time frame today. Yeah, gold is definitely starting to lead. So I'd rather get a nip on silver and try and trade that. So whether that's going to be we sweep these or whether we sweep this sort of lower time frame cycle and break, um, we'll have to keep eyes on gold and silver throughout today's session. Does that make sense? Anyone got any questions on that? All good? Perfect. All right. That's metals. Just got into indices. So, I do have a little trade breakdown actually on this we can cover. So, ES gave a nice little trade after our Tuesday call. So, obviously, you guys remember on Tuesday, what did we speak about? We sent the file, drop it in the group. All right, bet. So, obviously, on Tuesday, right, when we had our call, what was we speaking about? We said, two things. Either one, we're going to try and catch the spring today, right? If our schematic confirms. So remember on our Tuesday call, we was basically here. We said, okay, all right, wait for this, wait for that. And if we get a micro in here, we'll buy it higher, right? Or, of course, we come into here and accumulate. So what did we do at the open? What did we do at the open? We swept the lows, right? Oh, no, no, too fast, too fast, too fast, too fast. All right, we swept the lows, then we confirmed our accumulation, right? We had our SC, our AR, secondary test, secondary test, second test in B, spring, and obviously sign of strength, and then like a test slash LPS. So now, obviously coming in here, I'm not just going to blindly enter off this, right? So I went down to my lower time frame. Bitcoin and gold, we just did that, broski. Yeah, you should watch the recording. We just spent like 30 minutes doing that. So now when she came in here, right? 8%. You can see she comes in, preliminary support, selling climax, automatic reaction, secondary test, up thrust, ST, ST, STB, spring, and then because for me it was a type one, do we get the break? Got the break, comes back, mitigates. Oh, my fib's a little bit off on here. Comes back, mitigates. I ended up market executing. Obviously, I didn't set a limit on this. You know, I'm on a 5 second chart. I'm definitely not setting a limit on it. And you know, am I gonna wait point zero ticks? You know what I mean? It's the same price point. I think that's something you got to realize on futures. Like the price points are bigger on futures. So if you look, right, like on the right hand side of my screen, point 0.5 is from here all the way down to here. So there is a region, you know, there is an area, it's like a little space that the price point stays the same on futures. So obviously, am I gonna do I have to wait for it to come all the way? No, you know, like I'm gonna execute. And yeah, end up taking the market execution on this and then zooming out. My targets. This is my first target. And this was my main target at the 1 to 17. I mean, these were on intraday accounts. I mean, I'm definitely not taking a swing trade here. You know what I mean? I mean, of course, could we have a small runner and hold it to all-time highs? Sure, but you know, like one thing you got to remember is when you are trading like any sort of market and you're day trading, you got to know your average daily range. What do I mean by average daily range? Anyone know? Yeah. So how much? Yeah, but yeah, how much it moved in a day, but how much consistently does it move? And if you look at like the average range of ES, you're looking at around maybe 200 points, right? So when I'm sitting here, right? Well, it's not 200 points quite yet, but 167 points to that high, that's a reasonable target to have, right? Am I going to target I mean, all-time high is 250 points. Is it possible? It is. But, you know, if we go back to Tuesday, what news did we have on Tuesday? Wait, is this the right date? Yeah. Tuesday, nothing. I mean, you've had jolts, but it was fucking minor. So did I have a big reason for price to shoot 500 pips? No. So I'm going to intraday trade it. Yeah. So for me, these are my main targets. First target, paid myself, and then waiting for it to hit my next target. Or not the all-time high, this one. Yeah. And then that was it. That was all she wrote. Obviously now just think about time and price. What did we speak about? All right. Um, what did I call the concept? It's just the average, the average daily range. It's just the average amount of pips the market moves, bro. So like, yeah. But again, you got to know like because like if you're on certain now, this is the thing because if you're on certain firms like Top Step, you can't hold a trade overnight. So that's where you got okay. So for example, you look okay. So when does your Top Step account stop? You know, close your trades. I think around like 9, 10 p.m. UK. So you know, if I'm in the blue box, it's around 9 p.m. I can move around 200 points. So now even here, for example, on this leg, I might have a measured move that is holy moly, right? That is fucking 300 points. But am I going to hit that today on on a scalp account? Of course not. That's maybe 2, 3 days. Now, do I have an excuse for price to do that? Now, again, here's where you can start using your comparable strength because you need some advice. I got you, bro. Hit me with your questions, man. Now I know in the chat, I think it was Marco, bro. You was obviously talking about, you know, saying our POI broke. Right. Let's get clear on what a POI is. Our POI most definitely did not break. All right. We are playing off, all right, oops, of the rate cut decision reaccumulation. We are still in this leg at this point in time. So our line in the sand stays. Price can chop around, do whatever it wants for 4 years. I mean, I wouldn't want that to happen, but you know, it can do whatever it wants until that or that is broken, one, or two, everything stays the same, no matter what it fucking shows you. And that's where you got to know your legs. Because now lower time frame cycle. So we're bullish from here. Lower time frame we distributed was bearish. Redistributed bearish. Redistributed bearish. Accumulated broke. We are still bullish from here. But Kieran, we just create another reaccumulation? Did we? Did we? Look here, I see a distro, I see an accum, I see a break. Did we? Did we? I mean, what did Nasdaq do? Did Nas reaccum? Did Nas confirm it? No. Did did Dow confirm our reaccum? No. So now when we're looking at our correlating assets, because again, you can't just look at ES in isolation. You have to look at all your comparable strengths. Now, if you want to be even more detailed, you got to look at the companies inside of here. Like, please, like, if you remember anything off this call, please do not trade one market on US equities. You have to look at all three of them and apply your relative strength analysis. You have to. You have to. It's like it's a law. It's a law of trading, right? If you want to be profitable. I mean, if you don't, hey, don't. You know what I mean? I can tell you it's a guaranteed loss. If you do not have relative strength analysis, it is a guaranteed loss. Guaranteed. Oh, Kieran, I won it once. Do it 1,000 times, then we can talk. And remember, that's how you got to think. Because the brain, it loves to look at things in isolation. That's what the brain likes to do. But you got to look at the bigger picture, right? Because what will happen is you'll do something once, get a reward from it, pass the challenge, get a payout, win a trade. In your brain, you're thinking, I did something right, I did something right. So I made money. But again, if you do that 1,000 times, will you continue to make money? So for me, that's why I'm not looking at this on ES as a reaccumulation. Because I mean, sure, I hit my target. Yeah, I'm good. I'm happy. I'm day trade. I'm done. I don't care what happens next, right? But even if so, now when I'm setting up for the next day and doing my analysis, why am I going to analyze US equities at midnight UK time? I'm not. You know what I mean? It's Asia session. So now when we come till today, right? Or sorry, yesterday. Well, what did we do? We just came down, mitigated our demand at the market cycle, and there was an entry yesterday. We'll go over in a minute before we get into the rest of the outlook. Oh, but Kieran, it broke market cycle, did it? It broke your POI. It broke the rate cut candle. I mean, we look at this chart. We go back to here. Oh, we're bearish. We're, we're bearish. We mitigated demand, targeting this high. Broke lower time frame cycle, came up, coming right down to a demand zone. What are we looking for next? Now, could it do that? It can. It can. Of course, I can be wrong. I'm happy to be wrong. But what I care about is being consistent with my approach every day. And if I have a consistent input, I get consistent output. So we didn't break a POI. We just mitigated demand. And that's why you got to check your relative strength. Oh, no, it's all good, bro. That's why you got to look at the groups. So does that make sense? Does anyone have any questions on that? Right. So now I'm in demand. Can I look to buy these up? Definitely. Oh, our entry? What do you mean? I don't know what you mean, bro. You need to show me. If you have a chart, that'd be so much easier. Um, yeah. Now, of course, can it still do that and go up? I mean, it can. Like, it really can. That's why you got to check your relative strength analysis and really know where those legs are. And this is why I say I don't really care about highs and lows. So now coming into indices, I mean, we'll go for another trade recap quickly. But now this is what I'm looking at today. I'm looking to buy these. So today, could we now see a shakeout and price come back down? Sure. All right. I do think we could probably wiggle a bit higher on these today, probably to like 25,240. So I want to wait for price to pull back into here. Oh yeah, that entry, yeah, I'll go for that. That was a very aggressive one, but it was clean. Um, so I want to see price return back to here today on. Let me clean this up on here, and I want to play in the queue. Now I don't think we're going to get this play today. I'll show you my play I'm going to do today because it's a Thursday. Um, but this is the higher time frame thesis. So lower time frame, all right? I've got order flow. So what I want to do now is I want the order flow. So I want to happen today. I want the open for me to take a trade. I want the open to do this, and then I will be waiting for a micro. I'll be on the 5 second time frame. I'll be looking for a micro accumulation with a shit ton of volume. I'll be watching ES and I'll be watching NAS and I'll be watching Dow on all of my screens. I want to see all of them put in volume and I want to see a one clear leader after my shakeout. I want to see one of the, I don't know who's going to be leading yet. If I had to guess, it'll probably be NAS at the moment leading. And I'll probably focus more on ES and Dow. But I want to see one clearly leading. I want to see, for example, NAS. It doesn't have to be NAS leading. I'm not set on stone on who the leader is. If you're a leader, if you're leading, you're leading. Once I've got a leader, I'm gonna look at my laggers and I'm gonna wait for a reaccumulation. And I'm going to wait for a micro schematic. And I'm going to take a buy and I'm going to target the new high. Target that, I'm gonna target that. This is how I'm gonna play it today. If I don't get the volume, I don't get the accum and the reaccum, I'm not doing anything. And I'm gonna wait for this. And then I'm gonna probably wait for it. Maybe I don't know if we're gonna come this far down. Maybe then tomorrow NFP brings us back, and then NFP does that tomorrow. We're still bullish. Don't think we're not. Now again, backup plan. Can price still do that? Yes. Am I gonna be bearish? No. Why am I not gonna be bearish? Because there's zero economic reason. But Kieran, it broke demand. I don't care. All right? Economics drive price. Technicals are designed to confuse you at times. So if it breaks that, am I still bearish? Nope. I'm still buying it. All right. I'm still looking for the spring to send this thing higher. Now that's not going to happen probably till next month anyway. So for the next few days, for today, like I said, and in here, wait for the ladder leader, accum, and play the reaccum. I don't think we're going to be able to get an entry coming all the way down here today, just based on economics, unless I missed something. Did I miss anything today? What day is it? No, it's Thursday. All right, no, I didn't. Wait, imagine it wasn't Thursday. That'd be awkward. Imagine it was Wednesday. That'd be oh. Um, yeah. Does that make sense? And ES, exact same thing. And again, like ES is looking more like a distro. You can see the shortening the thrust. Look at the impulses getting smaller. So let the open sweep and then play those micros up on those lower time frames. So if I look at my game plan today on the NQ, I don't think NQ is going to give a deep shakeout, to be honest, because it's leading. Um, oops. Bro, you ever done that? You ever click the wrong chart and you start analyzing it and you're like, wait a minute, what's going on here? All right, so something like that, then like that. And then, like I said, if I get that accum in here, I'm not buying the accum. Shutter Island MSC edition. I'll wait for that reaccum and I'll be buying it up to target the new high. ¿Comprende? ¿Cómo estás? I don't know what I just said. Yeah, so that's yeah. So I'm gonna set in some bro, it'd be so cool speaking Spanish. I'm gonna set some alerts here on these lows. I'm waiting for a shakeout. I swear to God, if I see someone trying to buy in here, bro, I'm going to send you to. I'm not going to say that. Year seven, Spanish coming clutch. Un goma. How to analyze premium and discount on trading. Um, so it's all relative to your leg. I mean, you got to know where your leg is, right? And you got to know what real market structure is. So, if you're looking at highs and lows, you're never going to get anywhere. But if you found, for example, your reaccumulation and you know your leg, that obviously you're in the leg, the impulse that caused that price action to the upside. How you know what your quote unquote discount is you just measure it. So you come in, you measure your manipulation, right? And then your discount is your 50% and below. But remember, make sure you do your fibs from here to here and not from here to here. The amount of people I see doing this 1 to 3, and they wonder why they never are not consistently profitable. Of course not. It's like me going, oh my God, guys, I'm really overweight and I'm really fat. I'm sad. Okay, fat boy, let's look at the causes. What have you done to get fat? Ate too much food, didn't work out. So I can sit there and look at the effect and cry about it. In trading, I can look at the impulse, the effect, right? Or I can look at the cause and what created that. So when I know what premium or discount is, all right, is I look at my manipulation that caused my leg. Obviously, you have to validate this, all right? Then I'll put that fib in. So from 1 to 2, and I'll just use obviously the 50/80, and then yeah, do that. Come on, my guy. You know what I was saying? So, but it's true. It's like if you look at it around us, everyone in the world, they look at effects and not causes. Oh, I'm really sick. Well, who was you kissing? Who was you sharing a drink with? You know what I mean? You got to look at these things. So in the market, what is the cause? What is the effect? Right? That's my cause. That's my effect. So I look at my cause, measure it up. Now I've got my discount. Platinum? Send me your chart, bro. I'll take a look. But yeah, so indices, like I mentioned, I do want to see. I'm definitely going to be all over these today. For a trade, I do want to see that shakeout, and then, like I mentioned, if we can see the baby accum in here, I'll buy the baby reaccums. I'm going to keep walking it up, but I need the shakeout first. So that's on ES, that's on NQ. I don't know if we're going to see that on NQ as much, just because of how strong it is. So that oh oh ugh. Oh, I take all of that back. I'm probably going to focus on Dow today. Oh, I didn't realize how clean this is. Oh my God. Yeah, bro. Um, we're getting charts in the chat. Are you looking at the right chat, bro? I just sent all of them. Are you looking at the right chat, broski? Or are those emotions kicking in, eh? Clouding that judgment. Because wait, can you guys not wait? Can you see them? Wait, let's double check. Can you guys see the charts? 111 if you can in the coin quest. 2 to 2 if you can't. Right? I've been sending them. I can. Yeah. See, that's just a perfect example of how those like this is the thing about trading some of you lot don't get. And I was having a great conversation about this with Tom earlier. Just when you look at the market, emotions are always there. And when you look at the market, they will creep up on you without you knowing. But Kieran, I don't feel emotional. Well, emotions aren't feelings. They're two different things. They're completely two different things. Emotion is a change in the biological signature of a cell. That's energy and motion. Emotion causes you to do something, right? Emotion, energy in motion. It causes you to do, to attack, to hesitate, to not do, right? Feeling is the awareness of the chemicals in your blood. Two different things. So my point is this: all humans are emotional. To be a human is to have emotion because emotions come first, thoughts come after. So now when you go on the chart, those unrecognized emotions will start to kick in and little things will start coming in your brain and you're going to think, oh, that's a setup. Or just in this example, oh, he hasn't sent him in the chat. So your brain could not see what was in front of you because of you was unaware of those emotions. I thought that would be a nice little teaching point. So the solution right, is to do your bellows breathing 24/7. Well, not 24/7, but like every before, during, and well, before and during trading. So your bellows breathing, right? It's really quick before we get back into it. Now I still need to do the other little trade breakdown. There's a few ways you can do it. You can do this way, you can do the opposite way. But imagine this bellow, right, is like when you're breathing is pumping air into you. Laying down, it's so much more easier to do this. But you breathe in. I mean, there's two ways you can do it. You can do this way where you breathe in, expand your belly as you breathe in, and then hold it, and then obviously breathe out, contract your stomach, or you can do it the exact opposite way, whatever feels more comfortable for you. But the key is to do that, to regulate your emotions, to actually see the markets clearly, because your emotions will cloud judgment. But I don't feel emotional. Exactly. That's the biggest problem. That's the biggest problem. The problem is you will not feel the emotion because you're like, I'm talking to your survival brain here. Remember, you got two parts of you, your conscious and subconscious. Subconscious is that background application that really controls you, and it's 95% of you. To your subconscious mind, yeah, the market is a saber-toothed tiger that's trying to eat you and trying to kill you because why? You're dealing with being right or wrong. You're dealing with money. You're dealing with success and failure, life and death to your emotional side of your brain. So it's going to shorten your breathing, it's going to change your biological state to arouse you to get ready to fight or flight. How does that manifest in your trading? You're either aggressive, over trading, taking loads of positions, breaking rules, or you're fearful, hesitating, and not doing what you should be. So they're always there. They're always there. So that's why it's your job to always be bellows breathing, consciously breathing, regulating those emotions. And if you're not, it's going to be almost impossible for you to succeed. How so? Yeah, obviously, not trying to be a dick there, bro. But I hope that just kind of showed you like how the emotions can really affect you, even when you think it's the least important thing. So, fib extension? What do you mean? So, okay. So number one, what you do is you look at your legs. So let's go on NQ. Oh God, let's go on ES. For that thing fucking rallies to the sky. All right. Obviously, you know your leg, right? So one, two. Obviously, we've now mitigated, right? So you get your fib, one, two, and then three, and then you just put on the 127 and the 1618 zone. Give you like 3 seconds to screenshot. One, two. All right. Let me know if that makes sense. You put on some muscle? Like, come on, my guy. A little bit of creatine. Back on the creatine, bro. Tell you something, creatine is really good for your brain as well. Really good for it. And your muscles. Um, but yeah, I mean, this is pretty much yeah. So anyway, we got too excited there. Regulate the emotions. So looking at Dow, yeah, Dow is looking the cleanest. It's the clear lagger on the day. Um, Now what we can diddly diddly do on this? Let me clean it up a little bit. All right. Hold on. Yeah. So I still wanna. We can fib it up from there. So I still wanna buy this. 15 grams? Oh, that's crazy. I don't know. It's got to experiment. I mean, I always just thought like just if you obviously take like too much of anything's bad, And I'm trying to be conscious about my liver and kidneys and all that shit. But I don't know. I'm not a doctor. Just experiment, try different things. For me, I just do five. It's five a day. But it might be better to speak to a nutritionalist about that. Or maybe just experiment, try 10 grams a day. Crazy. I mean, obviously, like there's a build up part. For the first, I think 3 or 4 days, you should take extra. Um, yeah, because you had 10. Damn. I don't know. I'm not sure. I'm not a what's the word? a nutritionist. For me, that's what I ever did. Maybe I can try more. I'm not sure. Um, but luckily, it's in a fitness channel, right? Luckily, they were talking about fitness over it. Imagine we was, that'd be awkward. Um, yeah. So for Dowley, there's a chance the Dow can sweep the high, and then I do want to see this sweep the open. I do want NYSE to sweep the open of the New York Stock Exchange. Um, but yeah, so let's see if we can come down in here, micro, and then buy it. How do you know which time frame to see the schematics on lower time frames if a higher time frame is like 1 hour on gold because it's very volatile? So just group it, bro. Just keep it simple. Obviously, go and watch our boot camp. Like I think we spoke about the durations on what day was it? I think it was I don't think we have spoken about it yet, have we? No. So no, we're gonna speak about that specifically actually on our next episode. So on Tuesday next week, bro, we're gonna go through like your lower time frames and what time frame you should be on the lower time frame. But like as a rule of thumb, you just go to your next group. So right now I'm on a five, so I'll group the 5, 3, and 1 minute together. So this is a 3 minute POI, so I'll be on the seconds when it comes in. Obviously, if you've got 50 minute, 30 minute hourly POIs, you'll be on like the minutes, 5 minute, 3 minute, 1 minute for entries. If you've got like a 4 hour daily, weekly POI, you're going to be on like the 15 minute for entries, if that makes sense. But Tuesday's boot camp, bro, we're gonna go a lot more in depth on that. Yeah, and also like the volume as well, and sometimes like sometimes you don't need to spend a lot of time and fully accumulate. Like for example, yesterday, like the Dow didn't need to spend time accumulating and spend bare range down there. Why? Because well, one, it's London Open, and two, we're in the SC, AR, ST, STB. We're in the spring. Yeah, bro. So we don't need to, you know? And obviously, if you get loads of volume, like you get a big volume spike, you don't need to see it build it. And you can just play the reaccums. Um, I mean, we'll see. NFP Friday. I mean, NFP is obviously can be very volatile. I don't know, bro. That's the thing. Like as a trader, I don't know if I'm going to get an entry today. I never know. All I know is what zone I need to see price come to and what scenario I need to see occur. And that's how you can never predict price. No matter how good you are, how experienced you are, you can never predict. You can only create if-then scenarios. So. If my plan presents itself, I'll get an entry. Sure. But just in terms of like data and statistics, Thursdays, yeah, bro, like it's Thursdays. So I'm gonna be trying to look for an entry on a Thursday. Definitely. Yeah, and then obviously yesterday, there was a little entry on I forget, was it? I think it was Nas. And I was trying to play some other entries, but they just fucking never come. This was pretty aggressive though on the Nas. Um, so I mean, it's not like she ain't got to throw a lot of risk at, man. Like, like 0.06%, 0.125. But obviously, we came into our higher time frame POI, volume, broke market cycle, came back in to our 50%, right? In the spring, no economic reason for supply, right? Price came in, we're building the distro, but just look how weak the distro is, bro. Like, look at the sell-offs in this distro. Whoop, eh, whoop, 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 whoop. Eh. You know, like there's not really, yeah. I mean, this is very aggressive. Um, Yeah, I didn't execute this. This was just a back test. For me to execute this, I was waiting for that. I think these are setups that like if you take these, you're gonna have a quite a low win rate, probably in like the 20%, maybe lower, to be honest, because obviously this still does need to confirm that. This was a very aggressive trade. I didn't take this. This was a back test. Obviously, like that, the ES one was very textbook because we actually confirmed the schematic. So yeah, and all she did was where was we? Um, Futures filled you? Yeah, because for your limit, this is what I mentioned earlier. So like the amount that the candle moves on futures and the amount of like points it will move, it needs to move more. Like on Forex, one tiny candle push can move you 1 pip. But on futures, it needs a bigger push to move 1 pip, if that makes sense. And for a limit, it needs to trade through your entry price. So if your entry price is 24756.5, it's going to need to trade through 24756.0 or 24755.5. Yeah. 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 Where was your entry? The 15th? Hmm. Strange. Contact your broker. Ask why. But I mean, market execution is always the best if you can, bro. Yeah. But yeah, and this was very aggressive. It was a reacumen to the open. Very aggressive. I personally didn't want to execute it, just something I observed. And for me, what said I wouldn't take it, and I think again, if you do take these trades, you're going to have a very low win rate. So it just comes down to what you value, and it was because we were still in an active distro. So for me, if we would have got that and done that, I would have, I would have taken it. But yeah, this was just a back test. So yeah, let's kind of see what the open in like 20 minutes. So let's see. These things are just absolutely fucking pumping. Let's see if we do get a nice manip at the open. You've been practicing accumulation distribution. It's really hard to gravitate over time, different time frame. Yeah, but that's why you got to mark it up in the right way, bro. And that's why you need to get feedback on your charts all the time. Because I don't think I've ever seen your charts. So if you're going around and you're practicing looking at these schematics, you're not practicing anything. You're just reinforcing bad habits. Because if you're not profitable right now, how do you know that's an accumulation? Because it looks like it. Looks like what? What reference points do you have? If you've never got withdrawals, if you're not a full-time trader, you don't have the reference points of what a good trade and setup looks like. So you can't rely on your own analysis. That's why at that stage, you have to be getting feedback on your charts from someone who's got the results you want and not some diluted group chat that four other people have gone through. No, no, I'm talking about the source of the information, get that person to verify it. And if you're consistently getting it right, then cool. You're on the right track, right? You're good. You know how to trade. Well, you know how to analyze. Because analyze and trade are two different things. But if you're doing things and practicing by yourself, bro, practice doesn't make perfect. Practice makes permanent. And that's where a lot of you will go wrong because unfortunately you're too independent. You're trying to have this alpha mindset to do it by yourself. I can do it my way. And you're just reinforcing bad habits. And remember what happens, negative reinforcement. You have a kid that goes over your chart, goes over your wall with Sharpie, and you're like, good boy, he's gonna do it again and do it again. So you're going away, you're back testing a schematic, you see it play out in a back tested environment and it wins. So you're like, yay, because you're cherry picking all of the setups that are winning. Of course it's going to play out. But now what happens is they're all based on different criteria. And because they're all based on different criteria, that's why you're not consistently profitable because you don't have a plan. You haven't had each of your, like each way, for example, the way you mark up a schematic, the way you mark up a change of character, the way you validate a manipulation. You haven't validated each part of your strategy. Of course, you're not going to have consistent results. Of course, it's going to be difficult. Of course, it's going to feel like you're all over the place. Of course, it's going to feel like you're putting in the work day after day and you're just not making any progress because you're not. I'm sorry, but doing trading, like There's two sides of trading. You've got the team side of it and the solo side of it. The team side of it is, yeah, when you're learning, especially, right? But once it gets to a point when, well, it never gets to that point. You always stay a student, to be honest with you. I still get help from my mentor. I'm 10 years deep into my journey almost. 10 years deep. I'm still paying my mentor. I'm still finding new ways to send him money. I'm still doing that because I want more help. What do I need it? Fuck no. I quit my job years ago. Do I need? No. But what happened when I quit my job? The first time. Well, the only time. I think go back. What happened when I quit my job? I got cocky. I stopped contacting my mentor. I stopped getting my charts reviewed. What do you think happened to my trading? My trading, I lost all of my funded accounts. I had multiple FTMO accounts. I lost all of them. My personal account went into 30% drawdown. Why? Because I got cocky and I stopped doing everything I did to get me to that point. I stopped getting mentorship because I thought I made it. And what do you think happened when I went back to basics? What do you think happened when I went got coachable? What do you think happened when I was willing to change? We all know the answer. So the point is, like, if you're practicing, bro, practicing by yourself is a waste of time. If you're not getting it reviewed periodically. Now, of course, right? You can't always have someone looking over your shoulder. Of course, you got to go away, practice independently, but that work you did, get it verified. Because now, if you're going down the wrong street, more speed ain't gonna get you there faster, bro. So you can't just be practicing by yourself. I mean, sure, can you eventually be profitable by yourself? I think you can. But what do you value more? Do you value taking 15 years with no guarantee? Because I've spoken to people that have been trading for 10 years without a mentor and they're still not profitable. 20 years. I spoke to one guy who's 35 years. 35. But this is the thing, right? If you're practicing by yourself, practice will not make perfect. Practice will make permanent. So what are you making permanent? What are you reinforcing? Are you getting that work checked so that you can correct your mistakes and do it correctly? Or are you constantly doing the same thing because you want to save a bit of money, you don't want to annoy someone, you're scared of feedback, you don't want to be wrong? Well, I'll tell you something, if you're not getting feedback, everything you do is wrong because you don't have the reference points of what's right, you know? And that's the thing. I'm just telling you what worked for me. And when I go look at the students who go full time, who get payouts, who go to the six, seven, even eight-figure realm on live accounts, there's a science. They always do the same shit. It's not accident. Do you think Harry withdrew 20K in the month of September by accident? Do you think Nathan went full-time trading by accident? Do you think Harry Phillips, the other one, had a year of consistent profitability by accident? Do you think Jay got funded and now getting payouts by accident? No, there's a science. Now, you look at someone who has been here maybe for a year, 2 years, and they're not funded. I guarantee you, they're not getting feedback and they're not being teachable and coachable. That's the only reason. Like, the only reason, there's two reasons why you're not at your goal. One, you haven't given yourself enough time. If you're getting the feedback, right, you're putting in the work. In that sense, in that sense, cool. Give yourself time. Things I must experience. There's shit you need to learn and practice more. Cool. Get the reps in. But if you're doing it by yourself and not getting feedback and not staying a student, what are you practicing, bro? And I'm like, sorry, but if you don't like me saying this and you're getting annoyed, it's because I'm speaking to you. And obviously, to my profitable traders, you are, right? You are getting your feedback. You're sending your charts in the chat because everyone can make mistakes. That's it, bro. You got to, yeah, man. I mean, it's great. No, but look what you just said. I've been watching you and Mehdi for some time, right? But look at this, look at this. So you've been doing this, you've been watching us. But that's the key. You're watching, you're not doing. So if you keep watching, great. I mean, go for it. But are you going to get long-lasting change? No. That's why you go to the NFL, you go to the football, you got spectators and you got players. What's the difference? Players act, players do, players make shit happen. The players value results over everything else. So players have a whatever it takes mindset to make it happen. What was my whatever it takes mindset to make it happen? Motherfucker. Bro, I got into debt. I flew out to Miami. Bro, for a 2 day in-person mentorship, I had to walk 4.5 hours from Fort Lauderdale to somewhere in actual, I think it was downtown Miami. It was fucking far. 4.5 hours. I had to go through some Skid Row area. There was a fucking alligator at one point. I had to go through a bush. 4.5 hours to this guy's crib to learn from him in person because I had a whatever it takes mindset. I said, cool. I can get in debt. Obviously, I wouldn't recommend getting in debt, right? I'm not a financial advisor, but I was willing. I valued my future and the future freedom that I wanted to attain over the short term uncomfortable feeling of investing into myself and feeling shit for being wrong, if that makes sense. Because obviously, getting feedback, you're going to be wrong, so it doesn't feel good. So naturally, the human wants to avoid those uncomfortable feelings. So for me, because I valued that long term goal and actually being a full time trader, and saving myself time over the long run, compared to 10K right now and flights to Miami and that time. I value the long-term vision more, and that's why I was willing to do that. That's why I'm still investing. That's why I'm still asking questions. That's why I'm still getting feedback. That's why I'm still educating myself. And I've been full-time trading for, oh my God, I'm losing track now, bro. 6, 7 years, something like that. It's gone far. Right? 6, 7 years, I don't even fucking know at this point, bro. I'm losing track. But yeah, exactly, Harry. You said that yourself. Look at that. That's something you observe about Nathan. He trades full time and still shows up and participates in the calls. But then you're not you, but you get it. But then you're here, not profitable, and thinking, I don't need to watch the call. I don't need to get the charts. I don't need to educate myself more. All right, brother. Keep listening to yourself and see, and what's that going to get you? More of what you got. So if you enjoy blowing accounts, if you enjoy donating money to prop firms, if you enjoy staying in the same situation, being told by another man when to go to the bathroom, having to ask when you can take your lunch break, to ask when you can go on a vacation, if you enjoy that, go for it. Dude, keep listening to yourself. But that's it. That's it. The first step is showing up. And that's the thing, because we create cycles, right? So we have something called spiral dynamics, where you're either going to be spiraling upwards in upward success or spiraling downward to negativity. So keep an eye on what Dow's doing coming into the open, right? So that's it. The first step is showing up because when you look, okay, for example, right? When let's say I go on a trip, right? So for example, I went to Vietnam and Bangkok last month, right? And after Bangkok was my girl's birthday, so I obviously had a few days off, whatever. I started building negative momentum because obviously, bro, it's my girl's birthday. I'm not going to be fucking studying every day. You get it, obviously. So I was building negative momentum. So now when I came back to the office, it's not easy to get back into trading, get back into this, you have to build the momentum again. So the problem is where you think of, all this shit you got to do. Fuck, I got to read this book. I got to catch up on this price action. I got to journal this. I got to do this economics. I got to create this. Got to do. It's overwhelming, of course. But what you do is you break it down into small actionable steps. I don't think, I got to, fuck, where I ain't read for a week, so I got to read 100 pages. No, I just got to read one page. Okay, now I've sat down, I got my coffee, I got the book open. Mate, I might as well just read one more. All right, I might as well read another one. Oh shit, I'm enjoying this now. Oh my God. Oh my God, I'm 20 pages in now. You get it? Oh man, I don't want to backtest this chart. Fuck it, let me just do one. Fuck it, let me just do one. Fuck it, let me just do one. Let me just send one chart. Oh, I learned something. Oh, I spotted something. You get it? And the momentum builds. So you got to, so what are you feeding? Are you feeding your focus or are you feeding your distractions? What are we feeding? What are we feeding? For example, you're procrastinating a lot. Change when you trade. Not when you trade, change when you study. Change when you ask questions. Instead of after your work day, you come in from a 9 hour shift, 12-hour shift. Bro, the last thing you're gonna want to do is open the charts. Of course, I get it. The last thing you want me is screaming down your ear saying you're fucking shit. No, you're not. But of course not. But the thing is, that's why you should do it in the morning. Do the hardest task of your day first. Now you got to know yourself, right? I'm not a morning person. I hate more. I hate it. So for me, right, that's why I obviously I trade in the night because that's what works for me. But for you, if you're working, let's say, because most of you guys are from UK, US, right? So if you're working in the day, going through that whole shift, and now you're coming home, or even everyone works in the day pretty much, coming home 5 p.m., 6 p.m., you have dinner, maybe you chat to your kids, play with your kids if you have kids, or you do what you got to do, bro, you're fucking knackered. Your focus is zapped. So do it when your focus is high charged. So wait, like the first thing in the morning. Wake up, have your coffee, read, get on the charts. Backtest yesterday's price action. Create your alerts. Educate yourself. Go watch one of our recordings. I've got literally 500 hours of videos in the CoinQuest channel. Go to the media section and watch all 223 videos that range from 1 hour to 3 hours long. Look at this, 2 hours, 2 hours. You know what I'm saying? So go back and watch the content. Go back and apply it. Go to the chart, practice the concept, send it, get feedback. Coin Quest because we're on the quest for coins. I don't know. I thought it sounded cool. If it doesn't sound cool, please give me feedback and I'll create something better. That's it. You've had not. Oh my God, right? Please send me that as a message so I can screenshot it and plaster it on Instagram. All right. I've had 9 months of profits since I've actually been turning up and doing the things he's preaching. And if I'm not mistaken, you're funded now, right, bro? So is it a coincidence, right? And you're funded, exactly. Right? Like, is it a coincidence? Is it luck that the people who don't get feedback, don't want to invest into themselves, don't want to change their habits, don't want to learn, and don't want to get feedback and ask questions, attend the call? Is it a coincidence that those people stay in the same place compared to I want to say my angels, but that sounds like wrong. But you know what I mean? So my master of coins, right? That are showing up to the calls, educating themselves, watching recordings, taking notes, getting feedback, right? Discussing in the group chats, not creating side group chats, focusing, staying close to the campfire. Is it a coincidence that these are the people that are now funded, that are now getting payouts, that are now full time, that are now booking vacations? Is that a coincidence? I think, sorry, Kaiser's chewing saying, Kaiser, is that a coincidence? Hmm? No, it's not. So, with that being said, we are going to start to draw a conclusion now. Because the open is coming. I want to quickly eat before well, I don't think we'll probably get a trade in at the open. I think we've got a bit of time. But yeah, I want to go quickly grab some food before the open and get myself set up. So, like I said, main focus today for me will be the three US equities. Dow, ES, and Q. I'm going to have them. I've got three screens. I'm going to have probably Dow here in the middle, ES on the right, NQ on the left, just because NQ is the leader today. And I don't expect this to probably give me an entry today. We'll see. I'm open to see if it changes. But at the moment, Nas is leading, so I'm going to focus on ES. Ideally, the Dow. If it gives me an entry, I'm waiting for the Dow to sweep these lows, come back into this larger 50, give me a micro. If it doesn't give me a micro, I'll play the reaccums up and I will be targeting here. And I'll be targeting, well, that's my main target. And then we'll see if we are going to crack the all-time highs on that. Does that make sense? Has everyone got any questions on what we're doing? Right. So you do nothing else but trading, and you just brought a 10K account. Go get a job. Straight up. That's the best advice I'm going to give you. Go get a job. No, but Kieran, I want to be a full-time trader. My G, if you ain't got the discipline to hold down a 9 to 5, you definitely ain't got the discipline to trade. But on like a real note, why you should be have a source of income or another thing at the start is because if you like you're going to be desperate for money. If you know you got rent coming up next month, you got bills coming up next week, Christmas coming up soon, you're going to be trading to pass the challenge. You're going to be trading to get funded. Of course, Kieran, I am. I want to be funded. Of course, Kieran, I want to get a payout. Of course, that's why you're not. Because trading is the exact opposite to every skill set in life. Think about that. Think about that, right? In life, right, you can control the outcome. In trading, you can't. So when you focus on the results will not come. They'll run away from you. It's like a cat, right? Chase a cat, it's going to run away. Or a woman, right? Chase it, it's going to run away. You have what it wants, it will come to you. So my point is, build a track record. If you don't have 200, 300, 400 trades on demo that prove you're profitable, why are you wasting money on a funded account? You do realize there's no such thing as a live funded account, right? Unless you are a real good trader and you've been with them for a long time and they'll eventually probably put you on a live account. That's different. But all these challenges is all fucking demo and they're just sitting there creaming money off you with this hope you'll be a funded trader. So unless you've got, and listen, if you've got a track record and you've got two, three, 400 trades that prove you're profitable, yeah, do the funded account. You'll pass it easily, right? You might fail one or two, that's okay. But if you've got the track record, you know you're profitable. By the way, that's another thing, right? It's normal to fail a funded account. It's normal if you're risking a lot, of course, right? That's why you're having a track record because now it's not normal losing four or five. Maybe losing one and then getting the next one funded is okay. That's fine. There's no problem with that. But that's why if you know your system, if you know, for example, my biggest losing streak is 6 trades, just for example, that's the worst losing streak you've had in the last year. Okay, and you're risking 0.5% and your total drawdown's 3%, of course, yeah, you might blow one account. That's fine. But then you can also calculate your risk. You can risk less. If you know your biggest losing trade or drawdown six, for example, 6 trades, well, give yourself more than 6 trades, right, in your risk. But that's it. It will definitely encourage the wrong trading behaviors. If you're trying to get funded and you're trying to get profitable and all this stuff without a job, bro, like you're just setting yourself up. But that's just basic anyway. Everyone pretty much knows that. Um, but yeah, bro. That's it. That's it, man. When like the Met Kaiser is like right under my desk. It's good. That's it, man. I hope that kind of helped. So keep an eye on the Dow today. This guy is pushing me back. I don't know if you can see me slowly moving away. Right. So definitely want this sweep on the Dow. We just had the open. So I want this open and I want the open sweeped. I really want this open sweeped. Let's see what ES is gonna do. There we go. Let's get that sell off, baby. Yeah, we go. Yeah, buddy. I don't think NAS is gonna give a deeper pullback. But alert on the all-time highs if we get a break. And then now is when am I gonna get a big volume spike, reversal, and when can I see the accums and reaccums to walk it higher? Does that make sense? Cool. I'll be active in the group. Why won't it give rebalancing? I mean, it can, but what do you have? What's your excuse? What reason do you have for that deeper pullback? What reason do you have for today? when we're not at a fib extension, what reason do you have today for this to drop 350 points? Exactly. There's no reason, you know? I mean, could it have be take rate? It could be, you know? But I think if we're gonna see that deep of a pullback, it wouldn't really be until NFP. I mean, is it a possibility that we could see the deeper pullback and NFP is the catalyst to go higher? That's definitely a possibility. But again, if we look at the average sort of daily range on this thing, I mean, today was a pretty, well, big expansions, but look at the pretty much average daily range. You're not looking at, let's just saying what New York normally does, 170 points yesterday. You know, to bring me down, like that the full move of today, the possibility really with no liquidity is like that over 100 times. So I don't really have a reason for it to want to sell off that much and take profit. Especially if we're not at the extension or the measured move. I mean, if we were up there, maybe I could be a bit more looking for a reason. Um, but I hope that makes sense, bro. Let's see the sell off. All right, cool. So I'm gonna get ready for this bounce. If we get the bounce, and then like I said, little reaccums and walk it up. All right, no problem. Cool. Yeah. Gold. Hello. What's she doing? Oh god, she's cracked it. She's shot up again. Let's see. I'll still look for buys in here if it micros. I still would rather that. The silver cracked. I still rather the big shakeout on these. I don't think I'm really going to touch currencies today. I think it'll be more indices, maybe metals. And like I said, if crypto gives a reaccum, but thing is with crypto, bro, like when it goes, it just fucking goes. That's the only annoying thing. Like, like coming to about 80%, accum with no spring and then gone. Tried to reaccum, no mitigation. Now it's just order flowy. So it's the only thing about crypto, but I still want to buy it. And then obviously gold, looking looking these two areas. Again, I've also got this massive zone here. So I'm going to be less aggressive, slightly more aggressive, the most aggressive. But obviously I'm going to keep an eye on silver mainly. I prefer silver, and obviously I'm going to keep an eye on what silver's doing. Because silver's still going to the all-time high. There's really not much point for this to do a deeper pullback. But cool. All right, guys, we'll end it there. I'll be active in the groups. Anyone needs me, just reach out, and I'll catch you lot on Tuesday, and we'll go through day, I think it's 10 of our boot camp. And yeah, we'll take it from there. All right, cool. Thank